Good week. Wonderful Monday. Please give me some okay that you can hear me. You can see my screen. And let's begin. So, how was your weekend, guys? Full of rest, full of recharging, fishing, skiing. How did you manage to spend your time? Family. Well, family is most important. Actually, it was also all about families here as well. We had some friends joined us this weekend. Then we visited some friends, but all around the families are good. So let's begin then. Let's go back to our charts. The week started all about the pound and speculations about a possible deal to be presented by May, and all related to the pounds would basically all eyes would be full attention to the deal. Will there be a deal? Will there be an agreement? Yes, no, when, how, why, and so on. So let's begin with our positions. The first few, we go over the European pairs. By the way, once again, for all those who are new to the live trading rooms and the trading reports, welcome to our family. First of all, the live trading room is our preparation for the trading week, especially on Monday. Then during every single day, we have the updates and the relevant opportunities as they appear or disappear, whatever has to be updated. Inside the trading report that you will receive after the live room, you have the access to all the most important webinars, our trading style related, and of course, to the summary of the live trading group. So the first ones for today, we have the European pairs, euro versus the dollar. We are dancing around. Where is my epic pen? Disappeared. Hold on. Oh, here. The first thing we have for with the euro dollar is this. That's the double cycle we are working with. Bullish divergence is building up, not yet in play. MACD still did not tick up. Daily chart, same story. We don't have yet any higher highs or any bullish structure with triple highs, triple lows going up, right? Everything still based on that remains bearish. So the expectations from the euro dollar are bearish after little possible pullbacks. The invalidation for that would be, well, first of all, if the trend line is broken, right? Mainly the big one. But also, if we start, and even more important, more conservative, if we start to create higher highs. Because then it will be very simple notification of a false breakout, higher highs as a possible turnaround, and then we should be looking for buy retraces. Meanwhile, as long as it did not happen, our plan, which started bearish from the previous breakout, remains bearish. Okay, that's for the euro versus the dollar. Euro versus the pound. Now this one is tricky. And here is why. According to the weekly chart, we are bearish. We were and remain bearish for our long term. Okay, triple cycle, bearish divergence. We expect a corrective cycle, which could be two waves or a range. Both scenarios would be more than acceptable to us. Both are still very, very acceptable and possible and in the play. It doesn't change any of the long-term direction because it was and remains bearish. And now comes the shorter term view. According to the shorter term, we do have 61.8 of the daily double cycle, right? Bullish divergence also in play, both moving average and histogram, and a golfing pattern that came on Friday. So that's basically what could trigger a possible corrective cycle. After such occasions, what are acceptable cycles, corrective cycles? Two waves or a range. So if we start here to make any false breakouts, that might turn to be a ranging corrective cycle as well. Okay, that's the bottom line. But now look what happened since the beginning of the week. The market begins, and one straight leg, basically deleting all the short-term build from the market from Friday. This is a say from the market that the bullish power might be completely weak. That little rally on Friday might be a trap. Of course, it all depends on what will we hear from Britain this week, Brexit related, of course, and that what will design the next possible movement. Will there be agreement? Would that be accepted? Would that be considerably good? We should continue and see the euro pound pushing lower and lower and lower, and by ideal going and simply duplicating it straight to 100, which is much lower, right? 100% level duplication. Currently we are on 61.8. The next level, if this one is broken and maintaining the momentum, is 0.83, and the final one is around the original Brexit news level right here. Remember this gap zone right here, guys? Okay, so once again, the long term is bearish, the short term are totally acceptable corrective cycle. No one guarantees will that be or not, or will that not happen. It's acceptable, but I just want to remind you the very basic logic. When you trade the high time frame cycles, all that might happen on the short term should be the thing that will allow you to rejoin your bearish opportunities. So should there be a corrective cycle? Perfect. We will be looking to go and to sell, continue with the higher time frame, right? If there will not be, we just hold our long-term position, which the last technical entry was right here. That was a few weeks ago. So for long term, we definitely remain bearish. Short term, we could still see the pair fighting around the 100, around the 61.8 level, up, down, down, up, and we definitely need to pay attention for further developments. On the short term, currently, these zigzags, personally, is something I refuse to trade. From my personal view, it's untouchable. It's best to be avoided and wait for next clearer setups. And for all those that are riding the bearish trend for the long term, there is no change in the long-term holdings. Once again, reminder, the last longer term was basically triggered here. Two waves correction, bearish hidden divergence, right? Trendline breakout, and we are riding. That's for the euro pound. The next euro is the euro versus the Aussie. We also are bearish here. Quick reminder where we all come from. This is also pretty longer term here, not too much short. The triple cycle, expectations for two waves or any possible ranging conditions. Now the day for that daily chart must fit in, and daily so far does fit in. We had a movement here, false breakout on the bottom, false breakout few days ago on the top. So as long as this top holds, the pressure remains bearish. Unchanged view here. The last trigger happened on last week, and for us, as long as this top holds, sell rallies was and will remain the plan. Okay. EuroCAD. There we go. Our longer term view was and remains bearish due to the triple cycle. We are after two waves correction, 1, 2, or any range. So far it looks like two wave correction. Weekly should fit in inside that, and it does. Triple cycle down, false break on the bottom, false break on the top, make it the current scenario to be a corrective scenario. That means sell the rallies. The last leg inside this range is a cycle by itself on the daily chart. Right? It could be broken as a double, broken as little triple here. Bullish divergence in play, and same story. Fake breakout on the bottom, possible ranging conditions at that moment. So sell the rallies would be our plan for this pair. Note, it could definitely hold this top and continue all the way down straight. It would be more than acceptable than if we do complete second attempt to push higher and create some bearish divergence here. It would be definitely acceptable scenario. And remember, from the weekly chart, we are still within this range. So rally closer to this top is very possible. Does that change any of our plan? No, because the plan was and will remain sell the rallies. And the last one, a new addition actually, that's the euro versus the yen. Now, I've been asked a lot about this pair. What's my view? So personally, I was wrong with my view previous week, because previous week I was very bullish in my mind on the short-term view, something like that, and then start to sell. Problem was that with this pair, it started the drop down before making any clear false breakout, and actually before reaching the cycle I wanted to see. This one. That's the place where I wanted to see that. From there, definitely be looking for the sells. However, we don't have any cycles in this place, and the last play here is based on divergences. Last divergence is bearish. So just want to remind you, without cycles, pure divergence, we are slightly more aggressive. But this divergence is bearish. Sorry. The 4-hour chart fits in exactly with the same, right? And this drop down does not have any opposite divergence. So yeah, we can say that that's an extreme, and it is. But there is no ending divergence to the daily corrections. So personally, I think we are heading to something like that. Corrective cycle. And on the shorter view, I would be looking for possible sell the rallies for the euro yen. So if we manage to find that slightly deeper back to this trendline area, right, we can definitely be looking for, where is my pen here, for sell opportunities. Again, short term, there is nothing to rely on from the long term in terms of cycles. Everything here is short term, more aggressive due to the divergence only. And that's all. Any questions about the euros? Next ones on the list are the pounds. Now, before we start, very important to mention, everything related to the pound is sensitive this week due to the fundamental, extremely important I would say news events, right? And we do want to remember not exposing ourselves too much. For the conservative traders of you, maybe it's best even to wait until it's all over and then look for the opportunities. For more aggressive traders of you, that's good, but choose. You don't need to expose yourself to pound dollar, pound franc, pound kiwi, pound Aussie, pound yen, euro pound, and so on and so on. It simply doesn't make sense. Okay, because if they will move all of them pretty much parallel, as it's straight coming from the pounds. It has nothing to do with any other currencies at that moment. Okay, so overexposure would not be a smart movement here. So let's start. What do we have technically for the pound dollar? Quick reminder, we are bullish after this double cycle. That means we expect long-term rally. On the shorter view, we got ourselves a pretty good combo here. We can call that a special cycle. We can name it as we want. It doesn't matter. It doesn't change nothing here. The idea is 3 plus 2 waves. Normally, this is a trend in conditions, which means that was the last false break to the bullish side. As long as this area holds, pound dollar is under bullish pressure. That's what it means. Daily chart was perfectly fit in until the previous week. The beginning of the previous week, that's what we got. A bearish divergence. After that, we simply expect a corrective cycle. The corrective cycle was here, right? It looks like two waves. It looks like a bullish divergence. There is only one problem here with that. In terms of two candles rule, we are missing. So there is still a good chance that all that turns to be just as first leg, and that will turn around and become bearish. So with that saying, yes, the divergence is bullish. Yes, the cycles are bullish. Technically, there was not valid correction in terms of two waves. The only good part there was that the correction did reach the 38.2 of the daily cycle. So that we had two waves. It did reach the 38.2, meaning, right, because the corrective cycle idea is to bring us back to the corrective zone, meaning in between 38 to 61.8. That's the idea of correction, generally speaking. That's why these are retracement levels, right? Retrace down to, and then the trend could go and continue. We are respecting the bullish trend, and we are holding it. We do have the cycle supporting us from the longer time frames. However, the patternal structure in terms of cycles is not completed and not good. So to take any decisions and conclusions based on trend lines, two waves or divergences, it's impossible in that scenario. That makes based on cycles, that makes the whole setup a bit more aggressive. As a bit more aggressive, my personal approach is always double confirmations. So you got yourself the first push. That would be the first thing you want to see, right? Trend line breakout happened, good. Wait for the next setup, next opportunity to join. So double confirmation. Why is that important, and how does it help us to avoid such possibilities? Randomness. Once again, everything could happen before with the pound before the deal is official, before we see the real market reactions, not to rumors but to facts. And until then, all the moves could be completely random. So on the short-term view, cycle-based, there is nothing to do. Okay, that means we will have to wait on the short view. For the long-term view, the plan was and remains still bullish, and that means that the last divergence that triggered us the buys was this bullish. That was the entry, and this one is still valid. That's where we got the partial cash out, and basically the expectations are still to the upside. There is one more thing to remember as a possibility, that if that turns to be false break and false break, we might be still dancing inside this ranging correction. As for now, it doesn't look like possibility, but with the news to be completed this week and the deal, yes, no, and how to be voted and treated by the traders after that, that's what will design the future pound-dollar decision. So no, there is nothing new to do on the short-term view based on cycles. But the good part is cycles is only one. I mean the trend lines right here. Trend lines is only one of the ways to trade. There is, of course, many others. Any of the strategies, Fibonacci's, and so on and so on and so on. So that's pretty much it. The long term for us was and remains bullish. Same exactly, say it with the pound franc. 1-to-1. We are bullish, ultra bullish for the long term. It's one of my best pairs, as you know, on my watch list. Could be done like this, could be straight movement, doesn't really matter. The divergence is there, the expectations are very, very seriously to the upside. The swap is also with us, which means holdings are very welcome. And we have the same structure, triple, double. Last false break was bullish, convergence in play. We are after buy dips. Daily was slightly against us at the beginning of the week. Previous weekend. That means we were looking for corrections. Correction happened, 2 waves, and that's pretty much it. Once again, is that classical 2-wave corrections? Of course, we can argue about that until tomorrow. The answer would be no, because classical corrections would bring it back to 38.2 with bullish divergence. It didn't, and now instead of that, we have the straight breakout, which means the bullish cycle, as for now, is stronger than any of the short term. The short term did provide a drop down on the short view. No, it was not technically classic. So does that mean it's not ready to continue? No. It means it could go and continue. And not always the market conditions would be classical. As simple as that. So the trend line was broken. If this high is also broken, we are continuing with the next levels. And the next levels for the pound versus the franc, according to daily expansion, will be 137, also clearance area right here, this high. Clearance means a lot of stop losses would be placed here by early sellers. And of course, the future target final destination 142, which also fits inside the weekly cycle here. Even slightly higher, like 140, 143, 144. So there's a lot of potential room to go upside. Our long term was and remains bullish. By ideal, well, personally, I would be expect for something like that, so some classical divergence. But Mr. Market, not always Mr. Perfect, as simple as that. If the news would not suddenly turn negative for the pound, the pressure would remain bullish, and then as long as this top is holding, the pair is under bullish pressure. There is also this structure of higher lows, higher highs going on. So by breaking this high, the pressure is back to bullish. Pound Canadian we covered previous week. We are game over then. Where we are. Pound Kiwi. Now this one also very interesting from my point of view. By the way, any questions as for now, guys? At this stage, any questions? Very, very important to pay attention to that. When the news create such excitement, the technical moves many times would become irrelevant. The perfect conditions we are trying to find in the market based on techniques would not exist when the moves are based on fundamental excitement. They will catch up later. The chart will rebuild itself, but it's very, very important to remember that and not just fall into this excitement and say, oh, so that's all, now all the pounds are flying. No, that could change within a moment. So remember that. Double cautious is always the best thing to do in such situations. And look for the next setup. So first of all, verify, then look for the next setups. Pound Kiwi, the long-term plan here is also amazingly bullish. That's our long-term triple cycle. So the expectations here, as you know, are like this. Fly and buy, as they have in the airplanes. The first movement upside was triple cycle. That makes it a beginning of the next possible trend. Then we had a correction. And here comes the question. Corrections could be in two waves or range. So that was definitely a possibility and still is. But on the same time, we did have a false break on the top. We do have a false break on the bottom. So that might be just a ranging correction. So as long as this bottom holds, the pressure is bullish. Very simple, technically. Daily was against, exactly like all the rest of the pounds on the previous beginning of previous week, right? We got the correction. Correction also cleaned us towards the Fibonacci levels. Let's put the Fibonacci retraces here. We cleaned the area of 38.2, well, missing few points, and the 4-hour chart gave us two waves to the downside, bullish hidden divergence for continuation, and basically the pair is ready to go. Once again, do we want to go and expose to all of the pounds? No. You need to choose your best setups, and the best setups, very simply, are coming from the technical rules of the strategy, systems, or methods you are following, and the risk reward you could gain. That's all. Based on that, you can go and make that conclusion. So Pound Kiwi for the long term still remains bullish for us. Does this one provide any new two waves and trend line or anything like it? No, it doesn't. It does provide a bullish hidden divergence after the correction. It does provide the fact the first leg was triple. Oops, sorry. Here, the first leg. No, again, wrong selection. The first was triple. 1, 2, 3. Double correction. Then once again, 1, 2, 3. And that's pretty much finalizing it, turning it around and making it bullish. Invalidation, last low. Once again, want to remind you guys, the excitement sometimes is much stronger than anything else, right? We all try to say, how not to miss the next move, and sometimes it's good, sometimes it's terrible because we forget all the principles, jump into everything, waking up the next day, the market changes the directions, and then we ask ourselves, how did that happen to us? So in order not to find ourselves there, possibly, pre-plan your risk management. The pairs to be chosen are according to the setup and the possible reward versus the risk you could gain. So that's the list of the pounds. Yes, there is a pound yen. Yes, there is a pound Aussie, and so on and so on. Once again, they all the same. We can continue talk about them all, but the idea would be the same exactly for all of them. So my personal three on the focus: pound, dollar, pound, franc, personal four: pound, dollar, pound, franc, euro, pound, which also related to the euro, and the pound kiwi based on the long-term cycles we have. To be honest, pound franc and pound kiwi are two of my personal favorites. The only disadvantage of pound kiwi for the long term is its swap. It's pretty expensive by holding long-term buys. Next, Aussies. Aussie dollar. My personal view for the long term was and remains bullish. You know that, right? We have this special cycle. Bullish divergence, bullish kicker, bullish divergence, bullish false break. Can't ask for more. Weekly, also recreating its divergence and recreating because the slope is still bearish on the MACD. So we better get our validations from the daily. Daily gave us the two waves, bullish divergence, right? Break of this trend line should be great continuation sign for the trend for the longer view. On the short-term view, there was a bullish divergence. It looks like a bearish convergence. There is only one problem with that, and this problem is two candles. So that's what we have here. On inside these last two candles, the high did not break through, and that makes it pretty tricky. So my personal preference in such case, as you know, look for clearer setup. Clearer setup we could gain by any of the next situations. Situation number one: better, clearer false breakout and higher highs that will not leave us any possible doubts, right? Or simply restart a bullish trend. How do we restart a bullish trend? By creating higher highs, higher lows. After that, buy retraces. That's the plan for Aussie dollar. It was and remains bullish. Aussie franc, we are bullish from previous week. Quick reminder, this was what we were trading the previous week. After that, we got a false breakout. We got a bullish divergence. And that's where we stopped. And after this trend line was broken and we start to gain the higher highs, we are bullish. So as long as this low holds, this is invalidation. Okay, it's bullish. Where is it all coming from? Once again, a very, very long-term view as a triple. Bullish divergence, of course. Not much to rely on the current cycles from the lower time frames. It still provides us a triple cycle though. Still bullish divergence. So we are still after this, right? And the daily chart gave us basically the drop. No bullish divergence. But if that's what we are expecting from the weekly, that means the daily could give us two waves correction, which it did, or a range which it missed a false break here. So for us, basically, based on the daily, as long as this low will hold, we remains bullish. Swap in our favor, so this one also fits in a longer term. So buy retraces would be a good plan here, and our invalidation for the short term is right here. That's for the Aussie versus the franc. Now, I've been asked a lot about the Aussie Kiwi. Is that ready for us for buys. Question is almost. We are still bullish for the long term based on this cycle. Quick reminder, this is a special cycle. We're at the bottom of these fake breakouts, and that will make it a range. Right, we're very close to this bottom. Weekly is making the double cycle, bullish divergence. Everything looks really good there. We are missing yet a new bullish momentum. We are missing turnaround and creation of false breakout and higher highs, and we are missing yet this structure. So the Aussie versus the Kiwi could theoretically still slightly play lower. We are still within that if we do ignore the one show spike. And again, that's the place pretty much where we would expect the turnaround to happen. It's not yet there, and therefore nothing new to do with this pair at that moment. So as per the Aussies, Aussie dollar and Aussie franc are the most interesting one. Of course, there is the Euro Aussie, which we discussed at the beginning of this meeting. And one more interesting opportunity in the list, New Zealandian versus the Canadian. Quick reminder, we are trading long-term sells based on that. And the fact we could expect here two waves or continue within this range. Top of the range, we would be after sells. On the shorter view, we had a triple cycle down, triple ascending cycle down within the weekly possibility as a double wave or monthly, sorry, double wave or a range, and that becomes as a possible double wave and a sell-off. Now here is the thing: if that's the first leg, then the daily has to be a cycle. Cat Frank is also on the list. That's after the Kiwi Cat. Okay. This was the daily chart. Triple, two waves, or a range by itself. False break makes it a range in corrections. So on the short view, Kiwi Cat could definitely push it higher. So this to rebuild itself as a leg and then prepare for the next portion for sell. So Kiwi Cat, as long as this would be our invalidation, as long as we are riding here, the short-term pressure could take it higher. For longer view, sell. Okay, just 1 second. I have my cup of tea almost fall down. Whew, that would be not nice. And the next one, Cat Franc, as promised. Here, Cat Franc, our longer term view is bullish. You might remember that from the monthly drop here. So that's what we are after. Pretty much like all the francs, to be honest. Weekly, last cycle was to the downside with bullish divergence. We got here a bearish, which means we were after corrections. Correction happened into waves, and we got ourselves a bullish hidden divergence. Oops, sorry. Here we go, bullish hidden divergence. Therefore, as long as the bottom holds, our view is bullish. On the 4-hour chart, we got also pretty much the same scenario we wanted to see. Here we got two waves, then correction, then we got ourselves this bullish divergence, false breakout to the upside, and now we are recreating the structure of higher highs. So Cat Franc, as long as it holds the invalidation area, last low, our view is bullish. Any questions about any of the covered things for now? Before we move to gold, silver, and the indices. Dollar yen. You know what, Ellen? Thank you very much, because I have it on my list and I forgot to talk about it. So thank you. Dollar versus the yen. Our plan is, let's cover it here. Short term, double cycle from daily. Weekly, we are lacking of the cycle, right? So we are only based on the daily cycle. 61.8. Each of the legs cycle by itself on the 4-hour chart. And this is the one we're talking about here. This doesn't look like, but it's a bearish divergence. And the 1-hour chart gave us previous week false break, lower lows. Since then, we are playing here inside this kind of structure. Hold on. I might be wrong. No two candles classical rule in play here. Last divergence is this one. So the idea is, first correction from the 4-hour chart is done, and that's the correction. It's broken as a cycle on the 1-hour chart, but this is one leg from the 4-hour. Now correction and second leg. So the correction is currently happening within the double wave, and once this becomes a bearish divergence, we are after looking for sell the rallies. So for us, we are heading towards the 38.2 of the double cycle, and our invalidation is the last daily top. That's our plan. Ellen, once again, thank you. Dropped it on my paper and completely forgot to cover. Thank you. So we are now into the commodities, gold and silver. As long as, let's start from the long term. As long as the last low holds, this is the last bullish hidden divergence, we are after buys. Okay. On the short view, weekly was against us here, bearish, ugly, hidden, and daily gave us special cycle and two false breaks, one as a trend line, other one as horizontal, and we are bearish. So that means we are in a short-term correction to the downside. That could be as a double wave, or that could be as a range. So this still would be a possibility. So sell the rallies on the short term would be smarter thing according to the daily cycle. For the longer view, once this becomes the next possible buy opportunity, some good convincing bullish divergence, we are after buys. Same exactly happens on the silver. We faced here two false breaks, so that might be our one of the options. 1, 2, or movement inside the range. For short-term view, we can play these corrections after rallies. For the long-term view, once the drops give us the bullish continuation sign, we are after buys. Oil, our view was and remains short-term bearish. That's the cycle we are facing. Okay. On the 4-hour chart, we got one fake breakout. And quick reminder, we might be false breaking it once again here before the next sell. Even with a new high to be possibly created, according to the daily cycle zones and the fact that the 4-hour chart fits in, even if it does anything like that with its divergence, the potential divergence for us rallies for sell. That's the plan with the oil, and there is a good chance we also would see that as a range. We got a false break. We got a false break, so that also might remain as a range in corrections. That's why sell the rallies would be our still valid plan for this week. Well, at least as for now. And for indices, now I'll start with where is that? Nasdaq here. Now this one is a bit surprising and suspicious with its current correction. Why? Because according to the weekly and its convergence between these two lows, here we are after sell the rallies. Daily did give us the corrective cycle, beautiful one. We did have a clearance area right here, right? Everything looked perfect, the divergence, everything, and even the 4-hour chart created for us false breaks, 2 of them, and convergence. Normally, that's the best sign we want to get as a rule of thumb. Problem begins when you have a correction which happens in one straight leg, crossing through all the Fibo levels. And this is currently, sorry, what's happening on Nasdaq. Very suspicious sign. And that means that we do, in such situations, have to do one of the two things. One, drop the risk, which means accept partial loss. That's what I normally do when I have corrections against me in one wave. That means maybe my cycle view was wrong. I'm not trying to argue with the market and prove him I'm right. I'm listening to the market. If the market tells me be careful, I will. One straight move through Fibonacci's corrections, all the corrections, basically tells us that maybe this is not just a correction, but a fake move to the downside. In that case, we do want to be careful. So dropping the risk is the smartest thing to do here. Will that hold or not? Only time will tell. According to the long term, we are still after sales. The timing, however, might change. If we do break through this high, the timing might slightly change, and then we will have to wait for the next fall break, the next signs. Okay, so Nasdaq, very careful with that. I myself, after jumping in the sell with the convergence idea, this is a time to accept partial loss. That's exactly what I do in such situations. Will that crash? If yes, perfect, because we're still partially in. If not, waiting for the next setup. But the most important thing when the market tells us be careful is to be careful, right? Not to try to be right, but to listen to the market, drop the risk. The idea is, and I want you to remember that always, guys, as a trader, you want to make money. You don't care about being right. Well, of course, for the ego, it's important to be right. But the bottom line, as a trader, you count the money, not how many times you were right or wrong. And part of making money is cutting the losses earlier. So when you see the market giving you the signs that it doesn't want to develop as you would expect, remember that the market knows best. If you try to convince him that you are right many times, you would find yourself with losing more than you technically should, because the market allows you with warning signs to cut losses earlier. And if, for statistics, you are able to cut losses earlier, you automatically earn more by losing less in the losing positions. And here's another very important thing I read in a book, and connected to this scenario. When I was reading one of the technical, I don't remember the name of the book to be honest, but technical view, the author is claiming very beautiful thing. What you draw as your plan on your charts is what you expect from the market to happen. Will the market follow or not? Only the market will decide. Your chart will not your lines, yeah, will not make the market to move based on your plan. The ability to change the plan is extremely important. That's why I wanted to show you that, guys. When everything looks perfect, sometimes still the market will say no, that's not time. It doesn't matter how big your knowledge will ever be. It doesn't matter how talented you are as an analyst. It doesn't matter how well you draw your lines. The ability of making money is the ability to adjust quick to changing market conditions. Instead of wondering, but how does it happen? There was everything. False break, divergence, convergence, everything was there. So instead of wondering, take an action. That's why I wanted to show you here. That's exactly what I do in such situations. Very, very, very important lesson that NASDAQ provides us in that game. And the German DAX, our long-term view also bearish here. We are. Why am I always choosing a circle instead of a line? So here is what we are trading for the long term. Just a reminder. Where is that here? 1, 2, 3. So 1, 2. That's our long-term plan. Weekly does provide us a bearish hidden divergence, already building up, and very, very possibly for the sells. So if that's the case, that means the daily must be a cycle. Daily does form a cycle. We are dancing around the 61.8 first zone. Definitely we could see that going to the second zone. Divergence already in play there, right? So yes, it could of course make anything like that, would be more than acceptable. The trend line of the daily cycle yet to break. So for long term, we don't have the signs to go short. For the shorter view, the 4-hour chart, trend line was broken. Now retesting. The only thing that was missing there was the bearish trend. So the view was and remains bearish. Yes, we are still missing the lower lows to be created, and we are still missing the daily trend line to be broken. So yes, the short-term trend line was broken. That allows us to trade within this range, within the daily and 4-hour chart trend line range. But for the longer view, to join the weekly cycle with the monthly confirmation, we have to go below the daily leg. So our plan was and remains bearish, looking for sell setups, and yes, that's definitely still possible scenario. And let me just make sure we are not missing it. Okay, the German, Deutsche Bank. The plan was and remains within this cycle. The price did not really change, so no real updates and changes since. That's the plan for Monday, the beginning of the week. Pound pairs, of course, due to its excitement of the moves and the natural wish to join them as soon as possible, they are the most interesting developments at that time being for the beginning of the week. Do pay attention to the rest of the pairs we covered. At the end of the day, they might be more interesting technically. That's all for today, guys. Thank you very much for being here. I wish you a wonderful trading week, and I'll see you later in the Telegram groups. Bye for now. Good trading.